As we are a little bit over the time, I'd like to just shortly introduce the next presentation, which will be held by Betul Kurtulus. Betul, welcome you on stage.
Hi. I hope you can see me. Okay,
Yes.
I can. Okay, you can see me, you can hear me. Okay. Well, thank you for inviting me. It was also always very interesting to listen all these digital solutions from the colleague in the market, Daniel. It's always interesting to listen the ideas, the digital evaluation of the of our trade finance market. My name is Betul Kurtulus. I am the regional director of FCI, responsible for Central Eastern Europe, Southeastern Europe, and the Middle East. Today, I will speak about how factoring is important to SMEs to access to finance. Okay. Sorry, it is okay. It works. Many of you already know about FCI. I know that, but I want to give short overview about FCI and our membership briefly. Here you see the distribution of our membership. We have almost 400 members in 92 countries. The blue dots you see here are the full members, which means they are actively trading in FCI. Representing here, you can see the 60% of the membership. This data shows the global factoring volume for the last 20 years and the compound annual growth rate. The global factoring volume reaches 2.9 billion euro for the last year, and the compound growth rate has been 9% for the last 20 years. You will see here the statistics for the Central Eastern Europe, here it is, and the Southeastern Europe and the Middle East. Central Eastern Europe and the Southeastern Europe region together almost cover 30% of the FCI membership. CEE itself is the most successful region in the world in terms of the growth rate. Poland and Russia in this region are two biggest markets. Poland differentiates positively with the annual growth rate and the total transaction volume. It's very big and successful market. There are also very successful countries in CEE. Maybe you can see here that the growth rate is for the last 5 years, and for last year is minus. It is because of the effect of the Turkey, because Turkey is a very big, far big market for the other regions. The factoring sector has been shrinking for the last 3 consecutive years, so it affects the whole total region's growth rate, unfortunately. And this slide is the Eurostat statistics. Since 11 years of growth we see in the Euro region until the COVID-19 effects. I hope these slides are visible for you, because even I cannot see. So the EU statistics shows that 11 years growth until the pandemic. The European market represents 2/3 of the world factoring market, and it is almost 11.3% of the EU GDP. You see here on the left-hand side the factoring growth comparison with the GDP growth. Here is the GDP growth rate. It is almost in between 1 to 2%. But here is the factoring growth. It is for the last 7 years, it is over 8%. Here it is. So it is very, very satisfactory growth rate. Phenomenal increase in the biggest markets. So you see here the biggest markets: Germany, France, Italy, very developed markets, and very the increase in these developed markets also very, very good. And here is you see the effects of the pandemic, but it is, of course, it is very obvious that there is a decrease on the total turnovers. here you see some statistics of the turnover for the first half, but it is the second and almost the third half is almost the same, increasingly decrease the growth rate. Here is the result from FCI, eddy factoring, minus 25%. This is from EU, it is 6%. This is for asset-based lending, 25%, and the SWIFT 15%. So I'm coming to the who is using factoring. Here you see, of course, all segments of clients they're using factoring. But when you look at the number of the clients, the highest number here, you see a big difference in the number of clients. They are the SMEs. Comparing with the other segments, there's a huge difference in the SME market that they are using factoring. So this is the very interesting slide. It is the data from EU. 75% is coming from the small size markets, and 14 from the mid-size, so almost 90%. You see here, market represents on SMEs. This is almost the whole market. And you see on the right hand side that the weighted average cost of risk of factoring, it is 0.09%, and the same ratio for the banking is 55%. So nearly, when you are comparing with the banking in the SME segment, nearly 5 times risky than factoring. So coming into the SMEs, the backbone of the world economies, small and medium-sized enterprises it's obvious that plays a crucial role in the economic development. They account for 90% of the business, more than 50% of employment, and up to 40% contribution to GDP in the emerging economies. Moreover, a healthy SME sector is important to increase the resilience of the economy to shocks like the economic shock, like the pandemic. But the SMEs have different types of financial problems to deal with. Difficult to access the bank credits, higher interest rate with short-term maturity, insufficient access to capital market instruments, or no access to capital market instruments, insufficient equity capital, lack of professional financial management, competition from larger companies. So there are lots of difficulties in SMEs' life on a day-to-day. So the financial situation of SME, when we look at the SMEs, they are reported that they're losing liquidity, and they are losing their cash flow during the pandemic. Of course, the support measures has been taken by all the governments during the pandemic, almost all the governments, that like postponement of the tax payments, guarantees for loans. These measures are actually measures taken to postpone the problem rather than to solve the problem. And it will soon lead to solvency problems. So many of the SMEs. So it is not the SMEs problems are not being solved with many of the governments, already postponed. So which means that so some of the support measures taken by especially for the Eurozone, may be easy for SMEs to reach and solve their problems, but technically they are not enough to solve their other problems, the day-to-day problems, which is reaching the cash flow and day-to-day finance. So factoring can be one of the best solutions for SMEs to reach the finance, because it provides very fast solutions, as we hear from the digital software solutions on the day-to-day life of the SMEs they are reaching and solving the problems. For me, the most important benefit of factoring, the funding depends on the receivable itself. So the level of funding is directly related with the level of sales. When the SMEs are increasing their receivables, the funding also in the same level increase. So it is they do not need any other collateral, or they do not need they have a strong balance sheet to reach the finance. And credit evaluation over only receivables enables much faster financing than other loan types, especially for the development of the digitalization. We see that kind of solutions in the market, especially for the SMEs. This transaction can be financed within a few hours with the digital solutions. We see very different solutions in different digital solutions in different markets. The scorecards created according to the market needs. We see the machine learning or artificial intelligence solutions improving to solve the needs of the SMEs in factoring industry. Especially factoring companies, some of the factoring companies, they are only uh, financing the SMEs and MSMEs. They are offering a very, very fast solutions in the market. In many markets, we can see that kind of solutions in different part of the world. Of course, there are some other benefits of the factoring, like outsourcing the sales activity, accounting activities, and differentiating the sales and the collection efforts. And then the SMEs can concentrate on their own works. But these are, of course, not today's difficulties of the SMEs. That we can see that the banks are much more reluctant to give the SMEs because of their vulnerability against these COVID-19 effects. So we are not much concentrated on the funding side and the continuity of this funding. So it's as the factoring depending only on the receivables, it is very sustainable funding, and it is very continuous funding as far as the receivables increase, they can create a receivable. And also security for against the bad debt. This is also the guarantee service is also very important for factoring, especially for the SMEs doing international business. Factoring perception for in the market. This is also very important. So it is for sure that there are some areas needs to be improved in the factoring perception. In some markets, still there is a misunderstanding of factoring. In the pricing side of the factoring, it should be explained to the SMEs very briefly. And also from the regulatory side, there is also some misunderstanding. So it is the perception is also we need to work on the first perception of the factoring. So innovation and digitalization, as I mentioned, I am responsible in FCI. I am responsible more than 30 countries. In different countries, in different regions, I'm seeing a very different digital solutions for the paperless environment, for creating a scorecard for the SMEs, for the artificial intelligence solutions. These are very, very important solutions that helps the needs of the SMEs to reaching the finance. But there is one missing point on all of these solutions. This is the role of the policy and regulations. This is also very crucial because as far as we are digitalized by ourselves, by the companies, the digital solutions from the IT and software companies, the regulations and the policy recommendations is also very important to be updated for these digital solutions. But as we can see that digitalization is no longer an achievement. It's a requirement for both SMEs and for both the corporates. it is not a question of whether policymakers will be able to adapt itself, but it is a question of how soon they will adapt to changing the dynamics, like the paperless environment, uh, digital type of shipping documentation, bill of lading kind of documentation. It is also very important. What does the international factoring bring to SMEs? Of course, in international factoring, the most important benefit to SMEs is to credit insurance, that we are securing the receivables in between the members, and collection efforts. It is also very difficult in the pandemic day to reach the clients and collect and communicate for the uncollected debts, to solving the problems in between the seller and the buyer, and also the funding. So it is, of course, very beneficial. What it's provide to the SMEs, they are reducing the risk in the foreign markets. So it provides liquidity and cash flow, risk management, and better competitive advantages for all the SMEs. So here is the comparison to other forms of trade finance. I just want to mention here that the markets is the trade finance market goes more and more on an open account solutions. Here, maybe you cannot see, but I can explain here the LC. It is the increase, the turnover, that turnover increase for the last 11 years. So we see that on the LC side, the turnover is decreasing. In the last 2 years, there is a minus increase in the LC. So the markets are going more and more open account. And on the open account solution, factoring is a solution for SMEs with no alternative. This is end of my presentation. If you have any question, just you can write from the chat area or maybe from the booths, both. I will be happy to answer.